Hello, I'm Jan Arsenault, and I lead the team that produces our quarterly newsletter Market Point. Stock and bond prices rose in the fourth quarter. And for the full year, stocks posted double-digit returns while bonds were up in the mid-single digits. Certainly a good year, given all the headwinds the global economy has been facing. But what's ahead? Well, from a macro standpoint, we know that monetary policy tightening cycles have very often ended in recession. However, so far, higher interest rates have only managed to kill inflation without killing the economy or employment. That is the often mentioned soft landing scenario, a positive but rare event historically. So we suspect that the debate around the recession versus soft landing is not over yet. Better than expected inflation reports as of late have certainly given the Federal Reserve and other central banks the ability to preemptively cut rates in order to support growth and employment going forward. But soft landings are hard to achieve. Cut interest rates too late and the economy eventually falls under the weight of high interest rates. Cut interest rates too early, and inflation never goes completely away, or even worse, comes back with a vengeance. When it comes to asset markets, starting with equities, valuations remain somewhat rich. Earnings expectations for 2024 and beyond also appear elevated, while sentiment is very bullish, which has historically been a short-term contrarian indicator. On the flip side, technology companies associated with artificial intelligence continue to attract a lot of attention and a lot of flows as well. In fixed income, multiple measures of inflation are moving lower, which is a positive tailwind for bond investors. In addition, clear indication from the Fed that the Fed funds rate is at or near its peak is also a reason for optimism. The attractiveness of bonds relative to stocks has led us to overweight bonds versus stocks in clients' portfolios. Within equities, we currently favor domestic equities, defensive equity sectors, and companies that exhibit quality, profitability, and size. Within bonds, the focus continues to be on higher quality bonds over riskier credit. Thank you for listening, and I certainly hope you enjoy reading our newsletter Market Point. You can also click the link in this email for a more complete review of our thoughts and insights. For additional articles, newsletters, and more, make sure to follow us on Facebook, LinkedIn, and TrustPointinc.com. Thank you.